Hi traders, Nathan Bray here from ACY Securities. Well, breaking news, the Reserve Bank of Australia has decided to go against forecast and raise rates surprisingly up to 3.85%. It was forecast to stay where it is at 3.6%, but 25 basis points blown all the forecasts out of the water. Now, what does this mean for the Australian economy? Well, in the RBA statement, one of the reasons was brought out that inflation, as we've been saying over the last little whiles here at ACY, inflation is sticking around. Inflation continues to grow. We have seen a little bit of a pullback, but at this stage, they're now looking at things like the wages growth that we're seeing, because when you think about it, the employment market, the unemployment rate is down at 50-year lows. It's a very tight labour market. And as they state, they're finding it difficult to find the right people. So how do they find the right people? Well, they pay them more. What does that do? Well, that adds to inflation. So that's the scenario we're in at the moment. So they may need to raise rates a little bit further than expected. And if you, in my mind, look at the fact that we've got massive household debt here in Australia, some call it a bubble in the household sector, raising rates is going to put more pressure on the amount of money that people can spend in this economy. And that could be devastating for our economy. So if they continue to raise and need to do further raising, then where does that leave our economy? Another point from the weekend was China's manufacturing, our biggest trading partner. Now, if they're manufacturing less and missing their targets, then that means they need less Aussie dollars, to purchase minerals or iron ore from Australia if they're manufacturing less. So for me right now, we've got a weakening Australian economy, an economy that's under a lot of household debt pressures, yet we're continuing to raise rates to fight this rising or sticking around inflation. So now to break this Aussie against the US dollar down technically, at this 66.80 level is our own senior market strategist, Duncan Cooper. Hi, Duncan.
So when the news comes out, an area I'm watching, if we can get a spike up, is the 79% level of last week's trading range, 66.76, and daily resistance at 66.81. Yes, we could get up to the 67 level, but do we get a volatility run up to that area today? If we do, can we start to hold at that area and start to reverse? Can you then see you're set up to sell, to trade back down in line with the higher time frame trend? Alright, and if we can, rally, hold and fail, targeting back down towards last week's low, that's at 65.73. So back down to the 66 level area. Can we break back below that level? So after the news events over the next 24 hours, can we get a rally up to the 79% level at 66.76? Daily resistance at 66.81. Yes, we could spike up to the 67 level, but can we see a rally fail? Can you see a setup to sell for the next decline?